You must have heard by now about the recent correction in the PSX. And after months of rally, the market has suddenly pulled back. And naturally, the question everyone is asking is this about the economy or something else? Because whenever the market goes up, we hear it's due to strong fundamentals. And when it falls, suddenly new risks appear geopolitics, external pressures, policy concerns. So today, we want to unpack what's actually happening beneath the surface, what the numbers say, what the sentiment says, and whether this is a healthy correction or a warning sign. To help us make sense of all this, I'm joined by my co host Bilal Moon. Bilal, thank you for joining us.
Thank you, Sara.
Let's begin with the obvious. The market is down roughly 8 to 10% from its peak. So, is this just a healthy correction or the start of something structural?
Well, the question right now everyone is asking, and like you said, is this just a correction or are there cracks appearing into the market, right? And there's never a sure way of saying what is happening underneath the hood. But PSX or the KC 100 index saw a significant rally, right, starting from December, and we saw market making new highs every other day. And December and January had been extremely good for the market, and there has been a lot of uh, you know news coming in that retail investors have come into the market, and approximately I think 50,000 new accounts were opened in December, 25,000 accounts in January. And with the market, as they always say, that the market punishes those who come late to the party, right? And those who came late to the party thinking that the market is going to be easy, there are easy profits to be had in this market, and they could just invest money today and take out 10% tomorrow. The market gave them a really good lesson in long-term investing, that it's just not about day to day, but you have to be in the market for a period of time to make good returns.
So, one thing people often say is that the market always finds the story to justify whatever it's doing. When it's rising, the outlook is great. When it's falling, suddenly risks multiply. So, how much of this is real economics and how much is just market psychology?
I think it's a good question. You see, in the market, fundamentally was cheap, and considering a lot of factor, it is still cheap, right, compared to uh, a lot of regional stuff, and in terms of the local growth that we are seeing in terms of some of the companies out there. Uh, but the market or the fundamentals depend on the company's earnings, right? And a lot of companies have reported already, and the earnings came out as per expectations. And to some extent, a lot of the earnings results that came out were baked into the stock price. Apart from that, since as I mentioned that the index had taken a massive rally from December, so a healthy correction was expected, and then the market finds reasons to correct, right? And then there it could be in terms of the psychology, there could be a political news impacting, or it could be a regional geopolitical issue that might arise, and then one reason tops the another, and then the people start pressing the selling button. So I think it's to start with, I think it's fundamentally some fundamental correction, because the results had already been baked into the stock prices. The companies cannot grow massively overnight. It takes quarters and years to grow their sales, to grow their products. So we've had a decent run, and now a slight breather was required, and then we had some political and geopolitical issues arising, and which had an impact into the market. And with retail investors piling into the market, leverage being very high, one sharp day of correction will lead to 2 or 3 days of selling in the market.
There's also this perception that political expectations, stability, uncertainty, transitions, they quietly influence investor behavior. So, do markets in Pakistan react more to signals than to actual policy changes?
I think in my experience, the Pakistan stock market reacts extremely, or the weightage is heavily given to the political stability in the country. Over the last 4 years, we've seen a stable government, and we've seen the impact of that in the stock market, right? So that's a signal for you that the market does value a lot of political stability, and once that is clear to the market that there's not going to be a lot of circus going around in the politics, in the local politics, then the market tries to start looking at the fundamentals, which have always been really good in terms of the company, and the companies have been trading at cheap valuations compared to the regions, right? So once the political weightage is established that okay, we're not going anywhere in terms of the changes, then the market switches to fundamentals, and once that balance get disturbed, then the market either consolidates or goes into a correction.
Let's talk about the external side because this is where the numbers get interesting. Our reserves have increased, but external debt and liabilities have grown even faster. So, are we stabilizing or just borrowing to appear stable?
I think on the external front, there has been good news that the Pakistan bond has seen significant interest compared to what it had seen over the last 4 or 5 years, or in the previous government. During the previous government or at the start of this government, we saw some of our euro bonds trading at significantly lower value, which have recaptured that value. Yes, we've seen recently news of rollovers from the regional countries, either not declining, but taking time to do so. But I don't think that is much of an issue for the market right now. I think the market did make a big deal out of the US Iran situation, and a lot of noise was created around that. But I think that also was just a reason to correct. Also, I think what weighed heavily on the market was that the news around the former head of PTI, right? His health issues and his possible coming out of the jail. Right? That really also sent jitters around the market. And when you have such a large leverage and new retail investors coming into the market, and with recent positions, there it is going to create some sort of a panic. But overall, on the external side, on the current on the current facts and data, I do not see anything alarming.
So, when foreign investors were net sellers even during the rally, so who was actually buying?
I think the local companies bought significantly, and the data for the foreign selling is skewed because of a transaction where the Pioneer cement was sold to Maple Leaf Cement. Pioneer Cement seller had a foreign status, and it came under foreign selling, but it was bought by the local group Maple Leaf Cement out there. But I do not see that as an indication that the foreigners are exiting the market. Yes, of course, regionally we've seen some exodus of capital uh, from uh, uh, from the stocks, but I do not see anything significant. I think a lot of people are focusing on that particular foreign selling data, but that is skewed by one transaction which happened last week. Overall, if you see emerging markets are globally, emerging markets are rallying significantly. We've seen Japanese stock market, the Korean stock market making new highs. In fact, they are on a severe bull run, I could say. And also, the Indian stock market is also seeing some sort of a breather after the issues getting resolved with the US government. So I do not see anything significantly impacting the Pakistan equities on the foreign side. Yes, there has always been some selling out there, but the local institutions, the local companies have strong cash position which they can let into it. And of course, uh, as the Pakistan story improves, as the fiscal side, if the government works on it, improves, we'll see more foreign investors coming into the market.
So, if the surge was mostly driven by local liquidity, does the slowdown in buying now reveal the true depth of the market?
Well, I don't see any true depth. I would say that the market has done a healthy correction. It is significantly up over the last 2 years or so, and I think it's a welcome breather. And a lot of people would say that the consolidation was required before a new leg higher. And also, like technically speaking, right, we had those who follow technicals, we had a gap up in the index on I think 29th of December, where the index opened up with a significant gap, and the market technically came down and filled that gap. And also, those who follow technicals know that we had a head and shoulders pattern forming on the index, which showed some sort of a distribution. So these two things tell me that since the start or the end of December, we had an euphoria in the market, and a lot of investors who had been in the market over the last 2 years and who had been patiently waiting and investing into the market saw this as an opportunity to realize a lot of their gains, so which is natural. And as I said in the earlier part of the video, that the market usually tests or punishes those who come late to the party, and that's what we've seen.
So, what we are really looking at is not just a stock market story, it's a question of how durable this economic stabilization actually is.
So this was it in terms of the market wrap and a comment on the recent correction in the Pakistan Stock Exchange. Thank you to my co-host Sara Batool. Please let us know in your comments if you would like to hear more and if you want to get us into specifics of any technicals or fundamentals of the market. Thank you.